team.
Ladies and gentlemen, welcome back. We got another chart talk coming at you. It is Monday, November 20th, 117 here on the West, 417 out east by Bennett. Let's get right into the market right now. Market outlook. We got this breakaway market right now. We're seeing true momentum take shape in all of the most fun sectors. The semiconductors have been going crazy. A lot of these software names have been coming out of the woodwork. All the fun names from 2020, 2021, you know, Shopify's, you name it, the MDB, Zscaler, what else we long? A million names we'll go through, AI, Roblox. Well, there's just a ton of names right now all going. This is the time to be aggressive, but like cautiously aggressive, I'd say. Whereas like you want to add names and you want to trim and trail, you want to stick with your winners for sure. You definitely don't want to outright sell things into strength right now because we're seeing just such crazy momentum. But let's let the charts do the talking, huh? How about that? Got me?
I got you.
All right. So, I mean, here we got the S&P up. And it's funny because we didn't record a chart talk last week. And the one before that was like we lost the video. And it was, I believe, it was like this day right here.
Mm-hmm.
And while we began to bounce back, things looked so terrible at that point. And the conversation was, what sector is really going to lead the market right now? How are we going to bounce? Things look so bleak. And then, you know, it seemed like in the drop of a hat, the market completely turned around, just changed composure, changed characteristics. And we saw semiconductors first take the rally, but, you know, it seems like all momentum names and everything just started running like right at that time, and it just turned out that this was just a huge bear trap, and it just, you know, failed moves yield fast moves in the other direction, and now we're on this crazy run. Let's look at the Nasdaq. This is S&P right here. The Nasdaq is touching 52-week highs, closed at 52-week highs today. It's up 12 or 13% in like 12 sessions. Just an insane rally. And this was the masterful shakeout right here. It looks like it's going to die and then just get saved here, and then momentum to the upside begins. Again, you know, most important lesson you can learn from the market: failed moves in one direction yield fast moves in the other direction. It's just how momentum works. So, you know, we got this breakaway market right now. It seems like, you know, nothing could stop us. We have NVIDIA earnings tomorrow. That's like, I can't wait to get that past us because that's a big risk to the market. But it closed at an all-time high today, eked out a gain, closed just over those highs from the last earnings. So now their expectations are massive, and deservedly so. They should be massive. Look where the stock is, a $500 stock. It was, you know, sub $200 stock 8 months ago. So, you know, they've got huge expectations, and, you know, the market's kind of relying on them for another big report. So, you know, my take is that NVIDIA earnings are good. The party continues. NVIDIA earnings are bad. Probably a little shakeout, but we're seeing rates. You know, this is the TNX right here. We're seeing rates just come in so hard that, you know, I think we truly, and, you know, this is obviously a lot of recency bias, I really think we have a trip to all-time highs maybe by year-end. Maybe by middle of January. Like, this is such a face-ripping rally, such a breakaway gap. If you don't have any stock for this and you're just waiting for a pullback, you're pretty effed. You know, you're stuck. If you're a bear, you're getting killed every single day. So this is what they call a lockout rally. This is the perfect example of a lockout rally. If you want to go over some charts, Ben, I'm going to share this thing over. You know, enough of me yapping, and then I'll get myself together to share some charts of my own. Where is the stop share? Stop share.
I got it. I think I'm already
I got it
sharing right now.
All right, you got it.
So you kind of touched upon the 10-year again. We spoke, you know, probably the last chart since we missed last week and the week prior. We were talking about, you know, FISO, where we thought 5% would be resistance in the short term. And
we didn't think that. We didn't think this. This is sick.
Did I lose you? Did you lose me? Hello?
And hold on, my charts are loading up. There we go. Okay.
Oh, okay. I was like, hello?
No, I was waiting for this to load up. So, again, we talked through chart talks ago about 5% potentially holding the resistance, which it has. My thought was that we would shift into more of like a topping pattern, between this 5% and 4.3, and we would trade in this range, and also the market coincidentally would do the opposite and trade in its own relative range, which is pretty much the range that we've been in, with now 10-year near its recent low, market near recent highs, just kind of trading in opposite of what it's been doing. But lately, we've seen somewhat of a tiny breakdown stage. This red line is just this breakdown stage. We have the orange is like my thought of us kind of the 10-year kind of consolidating, which for now it's been in this breakdown stage. So for the next week or two, it's seeing if the 10-year can hold up this prior breakout area of this 4.3, or if it's just going to continue to break down lower. If it does continue to run right through 4.3, like what you said with this breakout rally, I think that makes a lot of sense. If we do kind of hold up here and start to hold that, maybe turn back up, then maybe where we're at currently, or within this range in the broad markets, maybe that is the shorter term top. And that's just keeping a close eye on this. Again, like you mentioned, the Qs, took out July highs, going back to all-time highs, you have 410 in the Qs. So we zoom out a little bit. Just give me a second here. These charts are so slow on Zoom. This is crazy. But yeah, so we can't really see it here. Again, the chart's not loading, but we have prior all-time highs at 410. Again, psychological level of 400 in the Qs could be resistance. But again, everything looks very strong. And there we go. Now it's finally coming up. So it seems more like a matter of if and not when we kind of retest these prior all-time highs, similar to what you were mentioning before. But again, we want to be cautious because we don't want to be just chasing after this, insane run. But like you mentioned, people are kind of stuck on the sidelines. This is kind of what pushes that rally even higher, because everyone wants that pullback. Everyone wants the correction. And we got that correction 2 weeks ago.
No one wanted it then.
No one wanted it, and now everyone wants it. And that's, when you kind of get, like you mentioned, those runaway markets. Again, sector-wise, everything has been, for the most part, very strong. Telecom, industrials, consumer staples, financials, tech, being the first sector to push through those summer highs in July. A lot of strength across the board. Does seem there's still continued weakness in healthcare, the utilities, the REITs, and consumer staples. With the REITs, again, one of the names I'm keeping a close eye on is if the rates continue to pull in, we should see these sectors that have been getting beaten up start to get some love. Again, not tomorrow, not the next week, but in some time, because, as this rotation happens, think about tech hitting new highs. From a rebalancing standpoint, you'd want to take profits in tech and add back to the weaker sectors. So there are some REITs that have been setting up. They just are still too weak, still kind of basing, but just keeping on the radar. If rates continue to come in, maybe there's some love in the REITs, maybe next quarter. Since my screen's still sharing, I'll go over, I'm still in this AXP. It's been working out pretty well. Let's see if this chart wants to show itself. So we got into this one. This was 2 weeks ago, or I guess end of last week, through this 154. Again, gap and go. It's been, trading very well. Again, retested the prior pivot high that we saw from back in mid-September. I'm keeping a closer eye on kind of this 168 area. That's my ideal area to take some profits in it for now. Again, just trailing, this vertical run, just raising stops to low a day. And also in this CAG, very low beta candy name, really hasn't done anything. Again, bottom right, weaker name. For now, just have risking about 25 cents in the name. Anything crazy. XP is kind of the bigger focus. For charts that are still setting up, we have this TAP, TAP. Very clear base that's been forming under this 60. Earnings are out of the way, so keeping a close eye on that. This AZZ is another name. We can see it, very textbook, bull flag that's been forming here under this 50 versus 48 for now. Again, earnings out of the way. And then last but not least, we have this ALX. There's a REIT name, very big base that's been forming under this 200. Again, if rates continue to pull back in, and we do sort of see some love from the REIT sector, this would be a name I keep an eye on for, that breakout through this 200. So I'll pass it back to you, Sheikh, if you want to go over any top ideas or good and bad trades. I know you had, a phenomenal day today. So I'll pass it over to you.
Yeah, I'll go over some of the alerts. I have a big pullback list. I'll go over that second. But so this SMCI is my biggest position right here now. I bought and trimmed some today. So I missed. Mark had such a great entry on this. I want to highlight it. This is really great trading, and this is like using the screw bar and all these different market dynamics in your favor. So November 13th. Let me see when this was. So I remember November 13th. When was that? I remember on this day. This is before the CPI. SMCI was very weak, and it was kind of puzzling to me. This is a very big tech name. It's in the AI trade. It's a big name in that. The 25 and 26 estimates are just like crazy high. So it's a big growth stock with high expectations. So when the market was ripping, I was very surprised to see it not ripping. And then the next day, after we gap up on that CPI, I was a little more hands off. I was like, man, I don't want to buy this gap. We're so overbought. Mark called this out pre-market. He said, screw bar in this SMCI. And what a screw bar is when a stock opens up around the high of the day of the previous day. So we'll zoom in here because, it looks like you could have gotten short this name on this day when you put your stop at highs. So the stock opens up the next day at those highs. Everyone's trapped. It creates momentum to the upside. So they have to cover their position, buy themselves out of it while you're buying the stock and create a momentum to the upside. So he used that as his entry. His price is like $260. He had like $2 of risk. This is a name that moves $25, $30 a day. So he bought like 268 against 264. Sick entry. So I was very jealous of him. And I waited until it pulled back. And then I started buying here when it put in this low, 278, and it started taking it out to the upside. I think my original price was like 283. So I bought a heavy there too, just against this pivot, just banking on the market, this market continuing. And it's easy to look back now and say, oh, everything's moving well. It's very tough to put on risk in an overbought market. You know it's overbought, and you have the risk of, you want dry powder because everyone's waiting for the pullback, correct? Like everyone's waiting on this pullback, and if it pulls back, well, you're fully invested. You just bought a lot of shit. You can't be looking to buy new things where you should because you're taking losses on so much other stuff. So buying like crazy last week was not the easiest task in the world. It's something you look back on and say it's easy because we held up. But I put on a full position right here at this 283, whatever, against 278. I was able to add a little bit and sold a little bit, 270, 297, 304, just like to book some cash and to book some momentum stock so I can give this thing room. But this thing looks like it's pretty cleared for takeoff. Now I can have a nice position on my hands. I really love this one. I think it's going back to highs, but I just wanted to highlight Mark's entry on that one. It was really good. Really adept entry. Some other names I'm watching short term was this Roblox. So this Roblox right here, we see the tight inside day at support. So one of my best names of 2021 was this Roblox, actually. Very similar trade. Now this is when it was so hot. So it had a little stronger reaction than I'm expecting. It gaps up to new highs on earnings. Holds this earnings gap. I bought similar to how I bought that SMCI when it puts in that low against that area. I bought 96 against 92. I rolled this up. So now when I see Roblox, virtually a very similar setup, gaps to the upside, holding that support really tight at support. So now if it wants to push up from here, I can add. I have a great position. I bought some today, but it's looking that same exact setup from 2 years ago. This Lemonade, I wasn't able to hold on to this one today. The entry was Friday through these highs right here. I think this stock goes absolutely crazy. I think this stock travels into these mid-20s. I hope it sets up for me more. I just, again, it's not easy putting on risk when we're this overbought. It's not easy. People will tell you, people will act like it's easy after the fact. I didn't have a great weekend. I didn't sleep a lot this weekend. I have so much new stock. I was so worried about a gap down. But I digress. I think this Lemonade's headed to this 22, 23, 24 area. It's got a 30% short float. This name just goes nuts when it starts to catch momentum. And then I have some of this Tesla from Friday too. And I'm in a bunch of other things that are extended. We bought similar to that SMCI and that Roblox entry. It put in that low. We bought that new high. My price is 231 against, oh no, it's even better than that. It's 230 versus 226. So this is just a pure swing trade. I'm hoping Tesla can break this huge downtrend. But that one had an inside day, so you could have some opportunity in that one tomorrow. buying through that 238, those new highs. I may look to add. We'll see. Other than that, straight pullback watch. I'll show you some of the alerts that we've had lately. It's like everything has just been on such a sick run. MDB trade of the week a few weeks ago, or 2 weeks ago. Snow had a nice alert today, but that one, we've been in. Right down here. What else? Red Rover. This is a dog walking website. Do I believe in the company? Absolutely not. Do I believe in earnings gap ups that hold the gap and take it out with volume? Absolutely. So, easy trade here. Holds the gap up. 8-day simple moving averages catch up. Puts in that low, comes up. You buy it then. You sell. I peeled some off into strength. Now I'm just trailing it. KD, similar. Earnings gap up. Inside day before the high, we got into 18. Still looks good. Just trailing it here on this 8-day. See where we go from there. This net. This is one of the names I'm deeply watching for a pullback. We had an entry 68. It gave alert. I wasn't able to catch this one. Hoping it pulls back. I'll get into that in a second. CELH. This one activated today. We're just seeing anytime you see one of these high beta stocks get really tight, they're giving such great entries. So it gave this inside day right here, and the entry is just 51 against what are these lows? 49.5. So $1.50 on the entry, not so bad. Already up $4 in the name. So there's just a ton of names been going, and I'll go through my pullback list a little bit now. So now if we do get that pullback list, that pullback in the market, here's the names I'm watching. I'm watching this PLTR, even this Roku. I can't believe this Roku broke this flag to the upside and did what it did. Just insane strength, insane action we've got right now. Datadog, this one was overbought when it went, but again, the best ones don't wait. Through that 104, still chugging along. Shopify didn't let you get in unless you wanted to buy at the resistance here before. MNDY, you see, gapped up on earnings, huge earnings, and just kind of went a couple inside days, continued to the upside today. Adobe, just the market leader in this AI game. We see a pullback to this area, 580. I'm watching. DraftKings, unbelievable strength. If it comes and retests this, 35 area, that's what I'm looking for. AMD, this one's never looked back. Broke this huge downtrend. It never looked back. Watching that one. DoorDash, another sick one. And look at this one, gaps up on earnings, makes a run, comes back down to the earnings low, virtually holds the entry, but shakes out these buyers, and then continues higher. That's masterful. And then CrowdStrike, just the leader in the space. That one pulls back too. So, some great action. The number one thing to look out for now is these NVIDIA earnings. It's the number one thing in this market. If they're good, I think the party continues. If the reaction to NVIDIA is good, they can have good earnings, and it could sell off the whole AI market. I don't know what's going to happen. If the reaction to NVIDIA is good, I think the party continues. Other than that, I'm definitely on pullback watch. Just trimming and trailing. You got anything else for him?
I think that's it, man. I think we wrapped it up.
All right, let's wrap this thing up. Let's pray to the market gods. NVIDIA, does it again. With that, we'll see you guys next week.